All right, all right. What the heck is going on in the Denver metro real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group, and this is our Denver metro market in a minute. And there's no shortage of headlines in national news outlets outlining Denver as one of the weakest markets in the country, outside of some Sunbelt markets. But let's answer that with data, shall we? And so each and every month we go through 9 metrics, health metrics, if you will, of the real estate market. Watch for trends. Did the numbers go up or down? And are they trending towards buyer's market or seller's market territory? So we look at it month to month. We look at it year over year. And we just started recording this, using this screen recorder versus just me rattling off the stats so that hopefully you can follow along a little better. And then we'll tell you how to use these metrics to your favor if you are in fact planning on entering the market, or maybe you're already in it. If you're buying a home, selling a home, or selling a home to buy another home, we got you covered with what you need to know. All right, so let's start breaking it down. Like I said, every month we go through 9 different metrics, and every metric gets a color coding based on if it's favorable to sellers, favorable to buyers based on trends, or neutral in the yellow. So the greens, good for sellers. The reds, good for buyers. All right, so we're just going to start with what I feel is probably the most important and biggest mover this month, and that is available homes jumping up to 12,970. Good for a 21% increase month over month, and also the 4th straight monthly increase. So if you got 13,000 homes on the market, somewhat fueled by a 12% bump in new listings, 7,600 plus new listings at the market in April. And you have contracts which fell month over month by 5.5%, thus creating a bigger supply and demand gap, thus creating more available homes than any time since I've been keeping track of these. So those are the metrics, one more, metrics that favor buyers as indicated in red. So the median sold price to list price ratio fell nominally by 0.1%, yet the median is still 99.21. That does compare it to compares closed price to final asking price. So it's not like there's this huge spread between asking price and closed price. In fact, the spread is 0.79. Now, flip side of that, metrics that went in favor of sellers last month. First, the average days on market dropped by, we'll call it 8%. That's the 4th straight drop of average days on market. Median stayed the same at 16 median days. Closed sales went up, and that's a natural byproduct of if we look at the month before, purchase contracts jumped up by 31%. So closed sales went up by 11% accordingly. And both the average and the median selling price, now this only measures what sold in April compared to what sold in March, so on and so forth. Average went up 4.2, median up 3.4%. Yet I'm gonna go back to available homes jumping up 21%, purchase contracts falling 5.5%. And we're likely to see some softening in prices based on that. Now, looking at this from a year-over-year standpoint, because we want to go there too. And forgive me as I scroll because we do track multiple markets here. So here we are, April 24 compared to April 25. Not too many greens, only 2. So the numbers that went in favor of sellers last month as compared to the previous year, the median price is up 0.7% from 610,750 to 615. Closed sales are up nominally year over year. That's not cumulative year to date. That's just April compared to April last year, up 2.3%. But the average, you can see, is down 0.7% from 748 to 743. Those are the smaller moving numbers. Also, median sold price to list price ratio down 0.9%. Now, let's look at some of these bigger by percentage measures. Available homes, we got to talk about this. 64.4% increase in available homes measured on the first of the month. What does that mean? Well, a number of things. If you're a buyer, that is a huge amount of homes to shop through, of course, and also a huge amount of leverage when you're making offers. Think about that. So that's up 64.4%. New purchase contracts down year over year. You know, it's funny because I'm not going to get into politics or anything, but around the second week of April, we were trending towards a much bigger contract number, and then it just kind of tapered off the back half of April. We'll continue to watch that. Market times, the average is up 29%, the median's up 60%. Now 60 sounds big, yet it's only literally 6-day difference, which is obviously a lot smaller. New listings up 17.7%. So a ton of homes at the market, many more than last year at this time. So last thing I'm going to show you here is what this looks like in graphic form. The measurement goes back to August 2022. That's when I started this project. First graph that we're looking at, this is median sold price to list price ratio. You can see some peaks, you can see some troughs there. Currently at 99.21%, been as high as 99.5% back in February this year. As far as a year-to-date high, obviously been higher than that. Let's look at average and median days on market. Some definitive patterns here as spring market brings average and median market times down, winter market pushes them back up. Yet notice that they were at their short-term here peak in December of this year and have not fallen as low as they were this time last year. I already saw that in the year-over-year comparison. Here's a big one right here. This measures, the blue line is new listings hitting the market. So peaks and troughs there, recognizable patterns. The yellow line is new purchase contracts. Same thing, peaks and troughs. The red line is total available homes. Now, let's look back to spring, this time 2 years ago, we peaked out at 8,300 homes in September of 2023. And then that dropped, as it normally does around holidays, starts picking back up, and last year peaked out at nearly 12,000 homes, again in September of last year. Well, look at this year. Drop down and then way back up, almost 13,000 homes on the market. This measures a 7-county area. Not all areas are going to look the same. So if you're looking for something that's a little more specific to your neck of the woods, just drop a comment, let us know. Happy to make that for you. So remember that. Here's closed sales, peaks and troughs, recognizable patterns there. And then here's average and median price. So the highest in this, 2.5, almost 3-year measurement was in April of 2024 in terms of the average price, $740, almost $748. Median, about the same, April, May, June last year. And now we did hit a high, a 2.5-year high at the median price, almost a 2.5-year high of the average price. So that tells us something there as well. We'll get to that. That, my friends, is what the market dynamic looks like in a month over month and year over year relationship. Now, how you use this data. One, again, this is big picture, 7-county area. So just like there's no, weather report for the entire metro, it can be different. There's no real estate report at a metro level that speaks to all submarkets. So again, if you're looking for something more specific, like let's say you plan on entering the market, you want to know what this looks like for Aurora, for Highlands Ranch, for Westminster, wherever, or a specific neighborhood, let us know. Super easy for us to dial in these numbers for you so that you can use this data to make the best purchase or sale or both decision for you. Now, I hope you find this helpful as I do in educating our clients. Again, I'm Sean Reddy of the Keller Williams Reddy Group. Thanks for watching. We'll see you next month.